You got to be flipping my flapjacks. We have drama back, folks. Very serious move in the market here today. A lot of stocks making some monumental moves. At the beginning of this video, I'm going to take you guys through some very important stocks making some very important moves and what this means for where the market is going from here, essentially. So that's what we're going to discuss at first in this video. Then we're going to get into a position I sold out of completely here today, why I did it, where I put that money. So we're going to discuss that. And the last thing we're going to get into in this video here today is there was a great kind of opening piece done on closing bell around the market, and I wanted to react to that. I thought that was a really good kind of opening bell, or closing bell I should say, but the opening to the show was really good, and so I want to react to that. Okay, by the way, appreciate everybody joining me as always. Action-packed one. I want to get straight into this one. All I need from you guys, smash that thumbs up button for me and make sure you subscribe to the channel. If you can do that for me, that would mean the world. Okay, so first off, something very important I want to start out by showing you guys here today is this in front of you, and I've been showing this recently. This is the ITB, which is a construction index ETF, right, versus GSG commodities, and what we see is a very large divergence. This is a 3-month chart essentially of these two versus each other, right? And look at this. We have GSG up about 6.6% roughly, and we have ITB, the construction ETF, down 22.5%. Folks, what is that telling you? What that's telling you right now is the market is severely concerned, not like a little concerned, severely concerned about stagflation's coming. Very concerned. Where we're going to have higher prices, higher than the Fed wants, higher than people want. But the economy is going to weaken and weaken and weaken. And that's exactly why you're seeing what you're seeing in front of you right there, where GSG is moving up over this past 3 months very nicely, which is commodities. And you have ITB just going down and down and down. That's basically telling you right there, get ready. Prices are going to remain high and go higher, but the economy is going to get worse. So that is something to keep an eye on. I think it's very important everybody pays attention to that. Next thing I want to show you guys here is look at the VIX here today. I'm going to go ahead and take off that. I mean, this VIX move today is monumental. I mean, we're talking it's a 20% plus move in the VIX, which means we got volatility back. Flapjacks are being flipped right on the floor. We finally got drama again, right? Put to call ratio, significant increase here today. Now, put to call ratio, very important to understand how this works, okay? Basically, there should almost always be less put options being bought in the market than call options. Why is that? Well, people usually are more optimistic than pessimistic, and the stock market usually goes higher. So it's very natural for there to be far more people buying far more calls than puts, right? But sometimes you get in a dynamic where put options could actually exceed call options. And so when that happens, you actually see the put to call ratio index here essentially go to 1 or more. That's when you're in very, very bearish times. Now, the important thing to understand is we're still a long way from that. There's a significant pickup here, put to call ratio, up 12% here today. But you got to understand, if we really get into a bearish market, we'll go 0.8 on this, we'll go 0.9, and we will go over 1. And if you look at any of the dramatic time periods in the past, we go over 1, right? This was, when was this back here? This was in the Rona crash, right? Put to call ratio went all the way to like 1.2 in that. Then in 2022, when we had the crazy inflation numbers and we had Russia-Ukraine start and all that stuff, look what happened. Right here, this was around SVB Bank, the whole banking situation with the regional banks there. Put to call ratio went to about 1.3 there. And now, do keep in mind something important everybody ought to understand. If you ever see the put-to-call ratio go over 1, usually buy. I shouldn't say usually, always buy. If you ever see the put-to-call ratio, it's usually like load, load, load the boat gently down the stream, but maybe not so gently, like load the boat with stocks. If you ever see this go over 1, there's a reason I always have the put-to-call ratio right on my TradingView tracker, right? So I can easily just kind of see where it's at overall. Keep in mind, you ever see that go over 1, buy, 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 okay? But we're not there yet as far as the market goes. We could definitely get there if the market gets more shaky, right? You're seeing, obviously, a lot of weakness out there in the market. Bitcoin's actually holding together pretty decent. It's only down 3% today, which I think is actually a win for Bitcoin. I really do. Like, traditionally, when you saw the Nasdaq go down big like this, or Russell go down big, you would be thinking Bitcoin would be down minimum 5%, if not 7, 10%, right? To only be down 3%, but do keep in mind, Bitcoin's been lagging big time here recently. Like if you pull up a 6-month chart of Bitcoin. I think it gives you the best tell, right? Bitcoin's basically at the same price it was back in November right now, right? So, you know, Bitcoin's just been chilling for the last 3-4 months now at this point in time, so do keep that in mind. Crude oil is going lower, so that is, I think that's a positive, but that could also be seen as recessionary, right? Crude oil going lower there, and the Russell's getting hit the hardest of everything here today, 2.7% move. The Russell, you know, it starts to come back to life, and then it just seems like it flounders out. Now, we have some stocks making some massive upward moves here today, obviously, right? Celsius, a massive bounce back day, right? But the thing you got to understand with Celsius, long way to climb back in that one, right? And so for a lot of us that have been buying the stock very recently, we're already up huge on this. I'm already up like 30% on my position in the public account, roughly, right? So a lot of us are up huge, but do keep in mind, we have a long way to go to get this stock back to $100, which I do believe it's going there over the next several years. We're not getting there this year, in my opinion, but we will get there eventually in regards to Celsius. It's going to take a few years to get there, and I think there's going to be a lot of money to be made along the road there. And I did speak about Celsius on the main channel last night, so do keep that in mind. ELF has a very good day here today. I mean, you know, ELF's a stock that's been absolutely hammered, but this one's making a nice upward move here today. ELF's up, you know, 5.5% here today. We'll take that. We'll take that. So I mean, you know, this is fun. You know, when you can have a stock like Celsius up, you know, 26% here today, ELF up 5.6%, Monster's up 3.5%, the Planet's up and Avant's up. Okay, the MJ stocks are starting to come back. Even EL's up today, which I bought some EL today as well. You know, that's interesting because I have a lot of stocks that are making me money today on a pretty disastrous day for the market. Like, I mean, look at the Dow today. It's down 700 plus. Who knows where it's going to be at the close? 800 plus. And so the fact that I have several green stocks today, whew, I'll take that. And then I have other stocks that are making some downward moves, but they're down less in the market, right? Now, in terms of stuff that's getting hit hard, higher valuation stuff. Look at all the stuff that's actually getting hit hard today. Shopify, higher valuation name, right? SoFi, higher valuation name. Tesla, higher valuation name, right? Palantir. Like, it's a lot of the higher valuation name stuff that's all getting hit hard. I mean, if you look here and we go to the compare feature and you look at all those companies, you know, we'll keep Palantir up there and you type in Shopify, right? And you type in Tesla. These are high valuation names. Look at, you know, Ford P and Palantir's, you know, even after this crash is still like 180 roughly, right? Or somewhere around there, ballpark. Shopify, Ford P, 76. Tesla's 121. That's the thing, like when the market weakens a little bit, you know, these sorts of stocks get hammered. So you got to understand, like if we were to see the S&P 500 go down like 25%, Palantir, Shopify, and Tesla would probably go down 50%. Like it's going to be much more dramatic of a downfall for those type of stocks because they trade at such high valuations. And that's what you got to understand. Meanwhile, other stocks that don't have sky-high valuations or have already been killed, right? Celsius, ELF, a lot of those stocks, they're like, oh, the market is down? Oh, we didn't know that. We were up 26% today. Oh, we were up 5% today, right? Even EL stock's green today. That stock's already been killed. So that's where it comes into play, really understanding market dynamics and how to find opportunities in the market, right? Now, next up here, I want to show you guys big tech, okay? So take a peek at big tech here today. Oh my gosh, every single stock is red. Apple barely red, but every single stock is Red Dead Redemption in big tech today. That's pretty dramatic. I mean, it's very rare to see every single big tech stock red, but it's the situation here today. Potential hedges, a lot of my potential hedges getting whacked today, right? Costco only down a little bit, Ferrari down, Walmart down, Wing down, Coin down significantly here. Look at Coin, down about 8% on Coin today. Bitcoin's only down, what, 3%? So that's interesting in regards to Coin there, right? If we look at my possible buys watch list here today, so we have, this is like a leveraged, kind of like Russell instrument essentially. And so this is what I'm keeping an eye on. I don't know if I'll start a position on it, but I might eventually. RH getting hit heavily. If that one goes back into the 200s, folks, I could get interested in buying some RH. But I need it to go to the 200s, okay? So I'm keeping an eye. If it goes to the 200s, I'm gonna step out there and make a move. If we see, let me see where RH is trading at valuation-wise now at this point in time. I'd love to see the forward P on RH. 28 forward P, not bad, you know, not bad. But I would love to see RH in the 200s. If that baby goes to 200s, whew, you know, I'll pick up some shares. I'll gladly pick up some shares of RH. Shopify getting hit nice here today. Bath and Body Works getting hit nice. SoFi, Mattel, Winning Resorts, PayPal, Ubri Booba, which I should take Uber off my potential buys just because I'm not buying Uber. Too much risk over the next few years to make me feel comfortable. Red Rock Resorts, keeping an eye on this one. This is one I actually like, Red Rock Resorts. Lululemon getting hit hard today. AMD getting hit a little bit. I did buy some AMD here today. And then quite a few green ones there. Hershey's is actually one I've been keeping an eye on. Hershey's seen a lot of weakness recently, but it has bounced back a bit. Got all the way down to 149 on Hershey's. Oh my gosh, that's insane. So that's what's going on out there. One last thing I want to take a peek at here is commodities. So cocoa, look, that's huge for Hershey's. So let's take a peek here. This is going to be a fun game to play. Let's compare cocoa. She's in love with the cocoa. Let's see, coca. Let's take a peek here at this versus, I don't know, I just want to see like a 5-day basis. Oh yeah, look at that. Coca's down, you know, 10.9% in the past 5 trading days, and Hershey's is up 8.4% in the past 5 trading days. That should come as no surprise, right? Like that's interesting to see those sorts of dynamics play out. Good to see GSG getting hit a bit here today. We don't want commodities to run, man. We do not want commodities to run. That's going to not end well for us. Now, what did I go ahead and sell out of completely here today? So today I went ahead and completely sold out of my Walmart put options. I mean, they exploded to the upside again today. You know, 77% gain, and I only held that for like, what, a week? I don't even know if it was a week. Like maybe it was a week long, those Walmart puts, right? To make 77% on my money in about a week's time, I could have got greedy with it, and there might be more money to be made there in Walmart, right? Because even after this drop, Walmart still trades at very high valuation. It does. And so it doesn't mean necessarily Walmart's done going down. Still at a 34 forward P. It might have some more damage to come there in regards to Walmart, but I don't want to get greedy with it. You give me a chance to make 77% of my money in a snap of a fingers. Thank you. So I went ahead and sold out of it completely here today. And what did I go ahead and buy? Well, I bought 33 shares of cake. That was our previous move from earlier in the trading day. After I sold those Walmart puts there, I got $332 for them, $332. And those expire August 15, 2025 and $90. So somebody that's buying that from me today basically needs Walmart stock to go down to $86.68, right? $86.68 to break even by August, right? So that's definitely possible, but I'm just good. Like with what I got there, I don't like to get greedy with these. The last thing I want is Walmart all of a sudden to start going back up. Let's say next week and start having a bounce back rally. And then all of a sudden I'm stuck in a weird situation where I'm like, okay, do I keep holding these out? Like, I'm good. And I still got my Costco puts on. So it's not like I don't have exposure to kind of the negativity in retail, which Costco still needs to get hit. Like Costco still needs to get hit. That one's just waiting. That one's dying to get hit, man. That one's dying to get hit. So I still got those on. Bought some more cake here today. Bought some more EL here today, right? And yeah, so portfolio looking really good as far as the public account goes. It's looking like a beast. I can't complain. Everything's looking really good. So that's what's going on there. This is my private group, stock groups Discord chat, by the way. It's a little busy. We got a lot of stuff going on in there. But and by the way, if you're looking to apply, join my private stock group. I'll put that as a pinned comment down there today. Access to all my best course curriculums, access to my private stock groups Discord chat. Should be fun in Celsius here today. Oh yeah, it's a fun day. See, I told you guys what I told you in the main channel last night, right? Celsius and Alani, right together, man. Those two brands are always together, man. So yeah, fun day in the Celsius chat. But anyways, okay, let's go ahead and let's react to some closing bell.
Closing bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make or breakout begins with the uncertain road ahead. The market's more defensive stance lately, and whether it's a worrisome sign now for stocks. We'll ask our experts over this final stretch. In the meantime, your scorecard today is not a pretty one with 60 minutes to go in regulation. It's another down day for the majors.
Not that bad for
the
me.
selling pretty split as well. You can see the Nasdaq is off. The Russell's down almost 3%, but the Nasdaq's ugly today. The other majors are down. United Healthcare, the big blow to the Dow today. On that report that the Justice Department is probing part of the company's business, will follow it. It's down 7%. NVIDIA is down ahead of its pivotal earnings report next week. We are watching that closely too, and we will in this last hour. Palantir's rough week continuing today. Shares are down yet again. Many momentum names are following suit. It is also worth taking a look at where yields are. At 301 in the East today, there's yields. They are falling across the curve. So you have a flight to safety today in some respects as well. The VIX is reflecting the mood of the market. It is a spike higher today. There it is by almost 20%. It does take us to our talk of the tape. Are cracks forming in the bull case for stocks? Let's ask our panel that question. Stephanie Link, Hightower's Chief Investment Strategist and Portfolio Manager. Cameron Dawson, Chief Investment Officer for New Edge Wealth. And Malcolm Etheridge, Capital Area Planning Group's Managing Partner. Steph and Malcolm are CNBC contributors. It's good to have everybody here. We start on the desk. Steph, what do you make of this sell-off? You could point to so many different things within this market. The rollover in momentum, the Palantirs, the AppLovins, the Vertivs, the trade desks, even the Walmarts. Even the Walmart this week.
I know. I think.
Hold on. Trade desk. That's an interesting one. TTD's been killed. I don't know what's going on with TTD. I need to do a deep dive. I should have already done it. It's just there's so many companies reporting earnings right now. It's ridiculous. So many conference calls for me to listen to. But look at TTD. TTD's getting wrecked, man. This one's interesting. It's a 5-day at TTD? So down 11%. Stock's down $72. If we look at a 3-month, Trade Desk is down 41% the past 3 months. You gotta be flipping my flapjacks. Oh my gosh. 29% down 6 months. Year to date down 38%. On a 1 year now it's down 12%. Look at this. It's straight off a cliff, folks. There's something either broken fundamentally in Trade Desk's business model, or this is a great buying opportunity. And I don't know which. I'm going to have to do digging here, but Trade Desk is back to the same price it was in November 2020. That's crazy. I mean, we're talking that's over 4 years ago. 4 years and 3 months ago? Oh my gosh. So what's the deal with Trade Desk? What's the deal with this one? TTD down 4. Oh my gosh. Where do we trade? What's that one at valuation wise here? Let's see TTD. 38 forward PE. I mean, if analysts are right with their numbers here, right? Because we're compiling kind of analyst estimates together. I mean, this looks like pretty strong growth company. Unless there's been something fundamentally changed and analysts need to get more realistic in regards to Trade Desk numbers. Let's pull up charts feature here on 1000xstocks.com and look at TTD. Look at this. Look at this on a trailing 12-month basis. The revenue growth has been stellar. Stellar for this company. It is slowing, right? But I mean, and look at where analysts have this revenue growth going for this company. $36 billion market cap now at this point in time. I'm just, dang, man. Look at the gross margins, jeez. But look at how the net margins have exploded. Net margins went from, a few years ago, negative, right, to now 20% plus. Even before that, they went up to 15%. Wow. Look at the earnings per share, and look at the earnings per share trajectory analysts have for this company. So unless there's something fundamentally broken with Trade Desk, this one's looking good. I'm going to have to do digging, real digging on Trade Desk. Because, man, is this one intriguing. Do I have a TTD? Oh, I don't have a TTD. I'm going to have to add TTD in the private stock group under the community stocks tab. I'll have to add TTD in here. Because wow. TTD. I'm gonna put it on my potential buys watch list. I still got to do research on it and see if I want to actually buy it, but I don't want to forget about this one. There's so much going on all the time that you can forget about these things. So it's good to just add them on there and make sure you don't forget. There it is. Okay, TTD. Jeez. Yeah, it's hit almost 5% again today. Wow. Well, hey. We'll see. Maybe that's our next one. Maybe it's TTD. Or maybe it's not. I don't know. I got to do digging. We'll find out. Research the business. Maybe it's broken business
We're seeing
model.
a little bit slower growth, to be honest with you, at about 2.
Over in momentum, the Palantirs, the AppLovins, the Vertivs, the trade desks, even the Walmarts. Even the Walmart this week.
I know. I think a little bit of it is that we're seeing a little bit slower growth, to be honest.
What's funny is her and him, almost every time she ever comes on the desk, it seems like they get into it at some point in time. I don't know what it is about these two, but it seems like almost every time they end up fighting at some point in time, or it starts to get to it feels like it starts getting heated. It's weird. It's weird, very weird.
Percent the Atlanta Fed tracker, and I have said that I think this year we are going to see about 2% growth versus 3.4% that we saw of the last 2 years, and we're not going to see 20% gains in the S&P 500. We're going to see maybe more like normal, like 7 to 10%. A lot of that is because we just don't have the fiscal stimulus that has been put in place over the last 5 years. We're not going to have it this year. The Trump administration is pro-growth, but they're not going to drive that growth by issuing a lot of money and putting money into the economy. They're going to hopefully figure out how to lower taxes and do more deregulation, and that is positive. But it's just not the juice that we have had. That's number one. Number two, yes, the momentum trade absolutely is rolling over. These stocks, this part of the market has had an enormous run over the last several years, and the valuations are really hard to justify. In the meantime, you actually do have pretty good earnings growth, but you have earnings growth in other sectors, Scott, that's just as good versus tech.
Look at folks. Palantir, is it going to break 100 here? Oh, baby, is it going to break 100? This should be interesting to see. Whew. Wow.
Some of the sectors are seeing better growth in earnings. And so you're seeing a broadening out, not only a broadening out with value beating growth, but you're seeing Europe up 10%, China up 20% year to date. And that's coming at the expense of the U.S., which is not horrible. We're still up 2%. There's still a lot of stocks that are up a lot year to date. But I just think it's prudent to take some profits where the valuations have gotten extended.
But this, Cameron, hasn't started like many people thought it would.
True. I think people are just late, right? You saw me taking a lot of profits on Tesla. You saw me taking a lot of profits on Palantir over the last couple months. I was just got out there a little in front of folks. I think, folks are now thinking about taking profits. They're just a little late. It doesn't mean, you shouldn't take some profits, but they're just a little late in some of these ones that have moved ridiculously huge.
The Trump administration 2.0 in the sense of what it's meant for the market. Almost everything is negative, by the way, since the inauguration, okay? The S&P is a fractional winner, 1/3 of 1%. That is it. Why? Because there's a lot of uncertainty over tariff policy, other parts of trade, global alliance.
Texas Roadhouse is down today. I looked at Texas Roadhouse's earnings last night, and I'll show you what I graded it here in just a moment. But I can tell you, I don't know, man. We might see me eventually buy back good old Texas Roadhouse, but where is it here? Okay, income statements. Look at this, baby. I graded this guy up last night. A+ from Texas Roadhouse. Very impressive. Very impressive numbers. I mean, it's incredible. I mean, their revenue was up 20+%. Their food and beverage costs actually fell on a year-over-year basis. Their diluted EPS went to $1.73 from $1.08. That's 60% growth on a year-over-year basis. Texas freaking Roadhouse, man. Well done. Company's a beast. It's a beast. With that being said, people are worried about much slower growth numbers in 2025 versus these numbers they reported back in 2024, right? Because their numbers came out yesterday, but that was for 2024. So that's something to kind of pay attention to, but who knows? Maybe I'll end up buying some Roadhouse again. That was a great stock for me. It made me a lot of money, but I don't have a position right now. But I don't know if it drops enough, I might buy it again.
It's coming, pushed off. Deregulation, still waiting. Signs that the consumer may not be as strong as we once thought. I want you to listen to a soundbite from the billionaire investor Steve Cohen. He was speaking at FII down in Miami about his view of where we are in this economy.
This is interesting.
But the reality is you've got a brew of sticky inflation, slowing growth, and austerity in the government. And so I'm actually pretty negative for the first time in a while.
What do you make of that?
So when it comes to the economy, we do think that growth is slowing, to Stephanie's point. We think that there are these dynamics that feel a little bit staggy, given the fact that you have some signs of some resurgence in inflation in certain areas, growth slowing. That certainly doesn't feel as good as moderating inflation and really resilient growth like we've had over the last 2 years. We are not calling for a recession, so we don't see signs that growth is falling off a cliff. But when the market is priced at 22.3 times forward, when high yield spreads are at multi-decade lows, that leaves very little room for disappointment. And so when we think about...
Exactly. And that's where my put options on Walmart came in and Costco, right? And that's why those ones are making so much money. Because at the end of the day, both those stocks have gotten to such ridiculous valuation levels that any little thing goes wrong and boom, it gets hammered, right? And you can make the same argument with, you know, obviously, like Cam talks about here, you know, 22 PE on S&P, you know, any little thing goes wrong, the market's going to get hit pretty heavily when things are valued like that. It'd be very different if the market was valued at a 14 PE, right? That's just
weakness that we're seeing today. It is a lot of the unwind of the most crowded, the most momentum names. Walmart went into its earnings season at 38 times forward earnings for a company that's growing earnings at high single digits, low double digits. So it's not all too surprising to see that positioning unwind and thus the volatility that we're experiencing the last couple of days.
Malcolm, it's emblematic of the trade that's worked of late, a more defensive posture to this.
Which is crazy. These Wall Streeters talk like that, right? Oh, you know, Walmart is, you know, going. Why weren't they buying puts going into it? Like puts were so cheap going into those earnings, right? I picked up those puts for what, $1 something out in August. I mean, you would have thought like, oh, Walmart's trading really insanely rich. Like anything goes wrong here, stock's going to come down. And these Wall Streeters love to focus on the short term. Why were they not buying Walmart puts? I think it's because they're sheep and they just go with whatever. People are buying Walmart stock, let's buy. Or let's not do anything then. Like, I'm like, dude, like the valuation was stupid on Walmart. Like, why not buy some puts before those earnings? Crazy, but.
Of late, a more defensive posture to this market. Staples, today, only group in the green. We know about Walmart's run. Discretionary stocks, weak, down more than 10%. Off of their highs. How concerned should we be by those two metrics?
Yeah, Scott, I think that sentiment overall, right? So you're talking about sentiment being reflected by names like Walmart telling us that demand is slowing and that the consumer is less confident. I think that shift in the narrative has really been emerging for the last 4 weeks, right? So a lot of what we came into this year believing we could hang our hats on as investors.
To be fair, I don't know if Walmart really said that. I think Walmart's point was more around, if you look at what Walmart actually said, they're worried more about slowing profit growth. Profit growth, not necessarily revenue, profit growth in 2025. So that is important to, you know, as somebody that's, you know, obviously just had a bet against Walmart. I don't want people to think like Walmart said like, oh, no one's going to come shop at Walmart anymore, because that's not what happened at all.
Before our eyes. 4 weeks ago, we thought America was the leader by a long shot, all things AI. DeepSeek comes along and says not so fast. We thought that deregulation and M&A was on its way, and this year was going to be the year of mergers and acquisitions. Earlier this week, President Trump says not so fast. We thought that inflation was absolutely on its way down, and the Fed had no choice but to start cutting rates. CPI ticked back up to something with a 3 handle. Not so fast. So all of these different things that were the narratives we were so sure about coming into 2025 in the last few weeks have just started to pull apart. And I think that the sentiment shift probably continues into next week, even though we'll probably get some dip buyers early in the week.
Steph, part of your bull case over the last year or so has been because the consumer has been a lot more resilient in your mind than many people expected it would be. Sentiment read today was bad. Retail foot traffic is the lowest in a year in general. There's worry about tariffs. You're paying 10 plus bucks for a dozen eggs. There are just a lot of concerns on the mind of consumers right now. Restaurants been slow since the start of the year as well. Texas Roadhouse talked about that. They'll be on with.
Hey, restaurants slow. Anybody see those comps, those Flower Child comps for Cheesecake Factory, right? For the Flower Child brand, up 11% year over year. Didn't look too slow to me. Looked pretty dang good.
Is this now a point of concern for you? And if not, why?
No, I mean, I'm watching it for sure, but I think the labor market is the thing that I'm watching to see if we see any cracks there, and we're not. You're at 215,000 weekly jobless claims in the last 4 weeks, and you have wages at about 4%. And you do have inflation, but you have inflation that is down from 9%. Gasoline prices are down 15% year over year.
Yeah, it's still sticky,
so
though, inflation is.
And I will just push back a little bit on what Malcolm just said about Walmart. Walmart did not talk about a softening a consumer, and they just put up a 4.6% same-store sales number, a 20% digital sales number. And so slowing foot traffic probably is because digital is taking share from being in the physical stores. We've been seeing that for years on end. So, and oh, by the way, retail sales, I know the headline was not great last week, but on a year-over-year basis, it's up 4%. So maybe the consumer isn't going out to the services, restaurants, and the hotels as much.
We're a service economy, right?
That's true, but they're still going. They're still going. Maybe they're just not going as quickly. Let me tell you something. I spent a lot of time on airplanes, traveling, and they're still packed. The airports are still packed, and restaurants are still crowded. People want to go out. Maybe they're just not going out as much. We're going to get Home Depot and Lowe's next week. We're going to get Target the following week. We're going to get some real-time companies, real-time focus.
You think Target's going to talk a big game?
No.
After what Walmart did?
I don't think that they're going to talk a good game, a big game, but I think they're going to say very similar things in terms of what is actually working. I mean, Walmart said apparel was actually working. That's the first time I heard them talk about apparel for like years on end. But it was
Lowe's and Depot? You going to hang your hat on Lowe's and Depot? I mean, the housing market's bad.
The pro market is not bad, and they have 50% of their business is pro, and they just made an acquisition which is going to increase their pro exposure. And so, yes, do it yourself homes and focus within the housing segment.
I think Stephanie brings up a great point there, right? When it comes to Home Depot and Lowe's, because real estate prices are so high, people feel comfortable still spending money renovating their homes and doing projects and things like that, right? That would change very quickly if the real estate market went the other way in terms of pricing started to go down in a significant manner. People would definitely pull back on spending. No one has a problem spending $20,000 doing a project on their home when their home appreciated $20,000 in last year. They're like, oh, I'm just putting money into this asset that goes up. But when things flip the other way and prices go down, that's when people start pulling back and say, you know what, why am I going to renovate my home? Prices just went down last year on it. Prices just went down last month. The Zestimate on my home says even less money than it used to say. So right now, we're still in that kind of fine time period. But if that ever switches, then you could talk about Home Depot and Lowe's not being in a very good place.
The housing segment might be a little bit on the soft side, but if they're not buying homes, Scott, they're going to have to refurnish and do all kinds of things. And I think that's what we're going to see. I think you're going to have companies that struggle, sure, but not everyone is going to struggle.
There is a thought, Cameron, that the bull case is intact, that there's just a lot of noise that is influencing the way that consumers and investors and CEOs are thinking right now, but that the trend is still higher.
Our base case for 2025 has been a wide, choppy range, meaning that because you went in at such high valuations, yes, you can get upside if everything works, but be prepared for that potential downside. And what we are seeing is a few important things. The first one is cyclicals are starting to deteriorate versus defensives. Industrials breaking down on a relative basis. That was a lot of people's favorite post-Trump's election win. You're also seeing things like investment banking roll over really hard, as well as home builders. That's very different than what we were seeing the last couple of years.
Well, because, Malcolm, I mean, if investment banking is rolling over, maybe it has something to do with what many would think was a curveball from the administration, that the Biden era M&A rules are going to stay intact for now. Well, M&A related stocks would be hit by that, wouldn't they?
Yes, Scott, my favorite trade coming into 2025 on the back of the election was the XLF. It was the financials and specifically the money center banks, the GSIBs, that earn a commission each time one of those transactions books. If we're now learning that that is not as likely to happen in 2025, or not as many of those transactions are likely to happen, that definitely has a ripple effect across all the other sectors, but it also has a ripple effect to the smaller banks, the regionals and the super regionals that others have been excited about in some of the other ETFs. And so I think we do have to at least recalibrate what we expected to be the major breakouts this year coming into 2025, whether it was energy or financials or something else that we expected to be helped out by the Trump trade. And I think that's really what the sentiment shift is that we're talking about that has happened this week. Investors aren't as sure about whatever their favorite trade was coming into this year after watching what's happened with trade policy, after watching what's happened across the different federal agencies, as well as the M&A activity that we were all hoping for. Tax cuts, another one you mentioned earlier, that we were expecting to have a little bit more guidance on by now within the first 100 days. It's looking a lot less likely that we'll get that as quickly as we had hoped for.
Well, we're only 30 days in, so we will see. But
yeah, no doubt. You know, it's a big game that's got to play out here, folks. It's a big game that's got to play out. So, anyways, it's Friday, baby, and I'm gonna go in the spa right now. I think I got it heated to 90-something degrees in there. Go celebrate the gains on Celsius today. Go celebrate those gains on those Walmart puts. And this weekend, going to do some digging on Trade Desk, TTD. Going to see if I find something, whether that's a good opportunity or not a good opportunity. And going to also listen to Texas Roadhouse call this weekend. Looking forward to listening to that. Also going to listen to the Trade Desk conference call as well, see what happened there. And then I might listen to the Cake call for a second time and Celsius call for a second time, and maybe the Win call for a second time as well. And I still actually got to listen to the Shopify conference call. I actually don't think I got to listen to Shopify's conference call yet. I think that's the only company I own that I haven't got to hear their conference call yet. So busy weekend. Alrighty, guys, appreciate you joining me. Much love as always. If you're looking to apply, join my private stock group, private wealth group, take your investing game up to a much higher level than where you're at. Access to all my premium courses, access to my private Discord chat, all that good stuff. Pin comment down there, click on that, fill out a form, see if we can get you access to that maybe next week. Okay, much love and have a great day.